If you're a trader or an investor, then you need to watch this video until the end. In this video, you will learn about an important aspect of the stock market that may just open new doors of profitability for you.
Hello guys, this is Shweta and welcome to the world of Wall Street Mojo.
What is pre-market? In the US, you might know that the stock markets are open for trading from 9:30 in the morning to 4 in the afternoon. During these hours, traders and investors can buy and sell stocks and other financial assets. But did you know that you can trade in the US stock market even before it opens for trading? So there is something known as pre-market in the US stock market that allows market participants to engage in trading activities before the market opens at 9:30 in the morning. The pre-market session begins at 4 and continues till 9:30 in the morning till the regular trading session begins. Traders and investors usually participate in the pre-market session to understand the strength and direction of the market for the regular trading sessions. You should note one important thing in the pre-market. Less liquidity and volume leads to high bid-ask spreads. Many traders trade the pre-market session only from 8 am onwards when the activity starts kicking in and the market becomes less thin. How does pre-market work? So the pre-market session is a session in which traders or investors can buy or sell financial assets in the stock exchange before the market opens for trading on that particular day. The pre-market session is an extension of the regular trading hours, and we can say that the US stock market is effectively open for around 12 hours a day. Another important thing about the pre-market session that you should know is that unlike the normal trading session where you can place both market and limit orders, in the pre-market session you can trade using limit orders only. The reason for that lies in the very fact that there is low liquidity during the pre-market session, which leads to what? Yes, you're right. It leads to high bid-ask spread. So if you place a market order during the pre-market, then you can instantly face a loss if the order gets executed at a bad price. That's why many brokers don't allow trading in the pre-market using market orders, and only limit orders are allowed. Who can trade in pre-market? Earlier, the pre-market session was made available only to institutional traders and investors like mutual funds, hedge funds, and other financial institutions. But with time, the US stock exchanges opened the pre-market session to retail traders and investors. By the way, major US stock exchanges like NASDAQ and NYSE have pre-market trading platforms that market participants can use to trade beyond regular trading hours. Advantages and disadvantages. One of the biggest advantage of the pre-market session is that when companies announce their results after the market has closed or before the trading session begins, traders and investors can act on such events and build their positions. When such news releases happens outside regular trading hours, the pre-market session allows market participants to absorb the news, preventing abrupt price moves just when the market opens. Now coming to the disadvantages of the pre-market session. Liquidity and volumes are seriously low as compared to the regular trading hours. As you already know, this in turn widens the bid-ask spread a lot. Finally, some brokers may charge extra brokerage or fees from the traders trading during the pre-market. So this increases costs. So this was all about pre-market, and we hope you have learned a lot from this video. Comment below and let us know if you have ever traded in the pre-market session and how your experience was. Don't forget to give this video a like and subscribe to the channel so that you don't miss out on the videos we post regularly.